Committee on Banking, Housing, and Urban Affairs will come to order. Today's hearing is in the hybrid format, or witnesses are in person. Members have the option to appear either in person or virtually. For those joining remotely, a few reminders. Once you start speaking, there'll be a slight delay before you're displayed on the screen. Please click the mute button to minimize background noise. All of you have been through this before, so I don't think I need to lay out all that we're doing. Our speaking order, though, will be as usual. That is by seniority, the members who've checked in before the gavel came down, either in person or virtually. And then by seniority of members arriving later, alternating between Democrats and Republicans. Last week, many Americans sat down with family and friends to celebrate Thanksgiving. I start with taking a moment to thank the workers who made that possible, many of whom didn't get the day off. Farm workers, grocery store workers, restaurant workers, auto workers, delivery workers, longshore workers, so many others who touch our lives. These are the people who make our economy work. It's something that the Treasury Secretary and the Fed Chair need to always keep in mind. Under the Biden-Harris administration, our economy is bouncing back. It's getting stronger every day. We created 5.6 million jobs this year. The unemployment has dropped to 4.6%. Weekly unemployment claims dropped to under 200,000 last week, the lowest level not just since the pandemic began, but in over 50 years, since 1969. Of course, raw jobs numbers alone don't tell the whole story. They don't tell you how good the job is, what kind of wage it pays. And on that front, the news is even better. Workers are starting to finally get a little more power in our economy. Last year, corporations called their workers essential, then many turned around and cut hazard pay, if they ever offered it at all, and cut corners on safety to make sure their profits didn't take a hit. Or worse, they laid off loyal, longtime employees in the midst of a public health crisis. They can't make those record profits without someone to actually do the work, though. Today, American workers are demanding what they've earned. After years of stagnant wages, of shrinking benefits, of no control over their schedules, workers are standing up for themselves and for each other and asking for their fair share of the profits they create. We just saw the United Auto Workers win better pay and better retirement benefits after a 5-week strike of John Deere. It was good for non-union employees, too. This is typical, who get a bump in their pay, too. For too long, corporate greed has kept paychecks down and prices up. Corporations cut costs at workers' expense to juice quarterly earnings numbers, even when they're already plenty profitable. Executives reward themselves with record profits and stock buybacks, while arguing they can't afford to pay higher wages to anyone else or can't afford to lower prices. During a once-in-a-generation global pandemic, despite the supposed labor shortages and inflation fears, Wall Street banks and corporations still managed to rake in record profits. Profits at the biggest U.S. companies shot above $3 trillion, $3,000 billion this year. The margins keep growing, and now while working families are just starting to get back on their feet, mega corporations would rather pass higher costs on to consumer than to cut into their already large profits. To continue the progress we made, we need to rethink the old system. The Biden administration is creating jobs and bringing down costs for families to build a resilient economy for the long run. The biggest costs families face have been rising for years, in many cases, decades: housing, health care, prescription drugs, child care, preschool. The Democrats' agenda will bring down these costs. We passed the American Rescue Plan, which got shots in arms and money in pockets, including the child tax credit, the largest tax cuts for working families ever, that's helped millions of families afford child care and keep up with the cost of living. 90% of families in Pittsburgh and Cleveland and Toledo and Philadelphia, 90% of families with children under 18 are getting at least a $3,000 tax cut. We passed a bipartisan infrastructure bill to upgrade our ports and transit systems, to revitalize manufacturing here in the U.S., to secure supply chains, to create millions of good jobs. 2 weeks ago, the House passed Build Back Better, which will bring down child care and housing and health care and other household costs. Now, and extend the child tax credit. the biggest tax cut, as I said. Now the Senate must act. The ongoing pandemic has exposed long-standing weaknesses in our supply chain, global supply chain disruptions and increased demands. As our economy rebounds, are causing higher prices in certain sectors. Secretary Yellen and Chair Powell are keeping an eye on this. The more we get the virus under control and understand its variants, the faster we'll see these disruptions subside. We're already seeing some progress. The bipartisan infrastructure plan's investment in our ports will help speed up our supply chains in the long run. Passing my Supply Chain Resiliency Act would further reshore and strengthen U.S. supply chains. There's also an even simpler short-term fix available. Corporations could lower their prices. Executives could get a slightly smaller pay bump this year. Stock buyback plans could be put on hold instead of raising costs for customers. Again, that's the choice they face. They could take a slightly smaller pay bump this year. They could cut back on their stock buyback plans, actually put them on hold instead of raising costs for consumers. There's no inexorable law that says profits for those at the top must continue to rise and rise and rise in perpetuity, even at the expense of everyone and everything else in the economy. Corporations can get away with it. We know this. I've had these conversations with Chair Powell and Secretary Yellen. They can get away with it because they have too much power in our economy. That makes it all the more vital that we not pull back on empowering workers. The Fed can't pump the brakes on our economic recovery too soon before workers get a chance to fully rebound, and I mean all workers. Women who finally started to make significant job gains last month, disproportionately forced out of the labor market as many took on the extra jobs of full-time caregiver and homeschool teacher. The black unemployment rate's still twice that of white workers. That's increasingly unacceptable. A resilient economy is an economy where full employment means everyone can get a job, a good job that pays a living wage, allows you to build a career and raise a family. It's an economy where everyone shares in the benefits of growth, where our progress isn't gambled away by Wall Street greed. Instead of doing Wall Street's bidding, we all, and I include the Fed, the Treasury Department, and this Congress, we all need to support the institutions that work at serving their neighbors and contributing to the real economy. That means supporting small business. It means creating paths to home ownership. It means supporting institutions like MDIs and CDFIs that serve communities that the banks ignore. That means making sure that workers have power in our economy and share in the prosperity they create. Corporations and their allies in this building, and there are a whole lot of them, want you to believe we have to choose between high wages and low prices. That's a false choice. We can have an economy where you earn a living wage and you can afford the things you need to live, childcare and healthcare and education and housing and groceries. Our economy can be a reflection of our values as Americans, ones that recognize every worker's potential from all walks of life from every corner of our country. President Biden recently announced his intention to renominate Chair Powell to lead the Federal Reserve and Governor Lael Brainerd to be the vice chair. They've helped lead our economy through the pandemic. I'll continue to work with both of them and the next Federal Reserve nominees that reflect the diversity in thought, in gender, and race, the diversity of our country. I look forward to hearing from the Secretary and the Chair on how they plan to build a resilient economy that works for everyone. Senator Toomey.
Thank you, Mr. Chairman. Secretary Yellen and Chairman Powell, welcome back to the committee. Chairman Powell, congratulations on your renomination. Despite our several disagreements, I look forward to supporting your confirmation. When the pandemic hit in 2020, Chairman Powell acted swiftly to stabilize financial markets and the economy. He also implemented a number of sensible regulatory reforms that helped to spur economic growth. And for those who would criticize those efforts, I suggest they look at the past 2 years. Our economy and our financial system experienced a very severe real-world stress test during the worst days of the pandemic. And we came out of it with the best capitalized banking system in America.